With a big tech embrace, this company made pizza delivery an art and a science. After a decade of cooking up returns, can new innovations in carryout fuel Domino's to a future worth biting into?
Every now and then, the stock will do something so stunning that even I am at a loss for words, in part because there are some words you just can't say on basic cable. So I can't really express how I feel watching Domino's Pizza surge $76, or more than 25% today, breaking out to new all-time highs in the process. But consider me impressed. Here's a company that Wall Street's been worried about ever since Domino's reported a tough quarter last summer, thanks to vicious competition from all of those online delivery apps. While the stock gradually made up those losses, there was still a ton of skepticism surrounding this one, which is why nearly 10% of its shares were sold short going into this latest quarter. Then Domino's delivers a beautiful top and bottom line beat with higher than anticipated domestic same-store sales, up 3.4%. The longs pile in, and those short sellers, they get squeezed. And that's how stock ends up rallying 25% in a day without a takeover bid. Can it keep climbing? Let's check in with the man of the hour, Ritch Allison, the CEO of Domino's Pizza, to get a better read on the quarter and what he sees going forward. Mr. Allison, congrats on the quarter and welcome back to Mad Money.
Hi, Jim. It's good to be with you again.
Rich, you had faith. And the way I know you had faith is that during this period when many doubt, you went in and you bought a ton of stock for the company. Is that because you knew that these so-called aggregators, these delivery people, would finally run out of steam, leaving you back to where you were?
Well, Jim, you know, in the fourth quarter, it certainly didn't get any easier from a competitive standpoint, but it just didn't get incrementally, more difficult. So we kept our focus on the things that we know will drive our business, and we had an opportunity to go out and tap the capital markets and take another $675 million on in debt. And we worked hard to deploy that during the fourth quarter so we could set the business up for 2020 for another strong performance.
Were there people at your shop who said, wow, we did great, but did we do 25% great? Or did people say, you know what, this is the breakout quarter, and wait till people see it, they're going to be astonished?
Yeah, we're really happy, Jim, with the quarter, on pretty much all dimensions, and in particular, the continued growth of that carryout business that we've been talking about for a long time. While most of the industry's running headlong into delivery, which is inherently a more profitable channel to serve, we're working hard to hold serve on that delivery side of the business while really growing that carryout channel, which is going to be an important part of the profit equation going forward.
Can you explain to people the gross margins of these situations, how much money you make, and how great takeout really is for you guys?
Yeah, it's interesting. So on the carryout side of the business, the ticket is lower, but because the cost to serve is so much lower, you end up with really strong margins in that side of the business. And Jim, this gets particularly pronounced on the coastal regions of the country where minimum wage has risen so rapidly. The cost of carrying that food to the customer is only getting more expensive. So we look at it as a nice mix of two businesses that we can run in the same box that when you combine them together, create a great profit equation for our franchisees.
Meantime, loyalty, unbelievable. Your program is probably the fastest growing loyalty program that I follow.
Yeah, we passed the 25 million active member milestone in our loyalty program, which we were pretty happy about. As you'll recall, this time last year, we had just passed 20. And it's really an area of untapped opportunity for us is to take not only those 25 million active, but the 40 million that are enrolled and the 85 million that we have in our customer database and really get more targeted and pinpoint in how we present offers to them. That's still an area that we haven't fully taken advantage of yet.
Now, Rich, you have never knocked competitors, nor has your predecessor, and I really appreciate that. But at the same time, as mentioned in your conference call, I've got an article here. Pizza Hut operator NPC considers options, including bankruptcy. This is a company that has $1 billion in debt. It's a very big franchisee. And I got to tell you, if I have a franchisee that's in trouble, my company's in trouble. It appears that you do not have the same mosaic of franchisees that your competitors have.
Yeah, we've got a much more distributed mix of franchisees across the U.S. And, in fact, we as the company are the largest operator of Domino's pizza stores in the U.S., and we like it that way. Number one, we feel everything our franchisees feel. So when I stand up in front of them and talk about what we need to do in the business, we're doing it from a place where, we believe it and feel it ourselves. And also, it minimizes the risk for us that if we had any one particular franchisee get into trouble, that it could cause a disproportionate impact on the brand overall.
All right, so let's deal with a tough one. At one point, you talked about Domino's China. This is Barclays, Jeffrey Bernstein saying, largest untapped market within Domino's system. Obviously, your main concern is to the health of the employees. If that's the case, how can you be open? Don't you have to send them home?
So, we've got, of our stores in China, which we've got about 270 or so of now, we've only got a handful of them that are closed today, but we have quite a bit more than that that are not operating, with a dine-in business today. So we're delivering product, but in most cases we're using what we call contactless delivery, where the team on the ground, in an effort to look out for the safety of our team members and our customers, have put protocols in place for us to safely deliver pizzas to the customers in China without a lot of direct contact with one another. And as you said, Jim, really first and foremost at this point in time, it's not sales, it's not store openings that we're concerned about. It's about the safety of our customers and our team members.
No, I understand some of the more rigorous outlets, of which I presume Domino's is, some of the precautions, some of them I'm reading are people taking temperatures of people who work there. Masks, obviously, these are things that I guess are now common practice in China.
So, Jim, we've got, and I'm so proud of our team, Dash Brands in China. They put some very good protocols in place, to make sure that if team members, are experiencing, health problems, that they stay home, and don't come in that could, adversely affect other team members or customers. And for those team members that are staying home for those reasons or couldn't get back from some of the more effective provinces, they're also taking care of the team members from a compensation standpoint, which just makes me really proud.
All right, so let's talk about the profitable franchises positioned for enterprise growth. A chart where you talk about the estimated average U.S. enterprise EBITDA per franchisee. It just keeps growing. I guess it's just continually worthwhile for people who are delivery people to ultimately hope and save to be able to get their own franchise.
Yeah, so, this past year, Jim, we still don't have the final numbers in on store-level EBITDA for our franchisees. It was $141,000 per store in 2018. We're expecting it to come in really close to that in 2019. And in an environment where labor costs are rising so rapidly, you really have to keep growing sales in the restaurant industry today, just to stay flat or to get any growth out of unit level profitability. So we're happy with where the cash on cash returns are there today. And then at an enterprise level, as our franchisees continue to grow, that gives them an opportunity to drive more EBITDA at their overall enterprise level. Also creates great opportunities for folks who've joined us as drivers or assistant managers to ultimately become a Domino's franchisee and fulfill their dreams. Well,
Rich, I just want to congratulate you. We've been with you since $10, never doubted you, and wow, what a quarter. Ritch Allison, CEO of Domino's Pizza, thank you so much, sir.
Thanks, Jim.
Always been right the whole way and still is. Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.